Are we officially in an unknown territory? Lots happening in the housing market. We're looking at rate hikes, inflation, external things happening. Hi guys, Abuzar here with a new episode of Market Track. We'll look at all the numbers within the month of May, statistics, and what's to come, and how to strategize, and how to cope, and what's to come, whether it's a buyer's market or a seller's market. And let's get going. Ottawa's housing market, what's happening so far? On one side, we have inflation going up as high as it's been for a long period of time. On the other side, we have the overnight rate being increased over and over, which was increased 2 days ago by Bank of Canada by 0.5%, and it seems to be an ongoing thing to offset inflation. We have a lot of buyers who are cautious, standing on the sideline. A lot of anxious sellers with unrealistic expectations based on what they've seen in the previous months. And we have fixed rates that have basically gone up very, very close to the 4% mark for a 5-year fix. Now, what's to come? What is my take on this? Personally, I think the interest rates being increased, it's really a limited solution to deal with inflation. Obviously, the government's doing their best to protect the mass and to reduce the amount of debt and the excessiveness of spending. That's understandable. But looking at the housing market, it's very interesting because similar rate hikes have come into play right around the ballpark of 2017 and 2018. And based on what I saw then, what I feel like will happen is very similar. So what's going to happen is the variable rates are going to keep increasing. The affordability of buyers will decrease. So buyers who are standing on the sideline hoping the market will crash so that they'll be able to, or prices to significantly drop, for them to be able to get into the market and take advantage, there is no advantage because your affordability will reduce based on the reduction of price. So however you want to look at it, it's a very difficult situation to be in. And I feel like because of the lack of sales, the financial institutions will feel the pain as well. So the volume will be reduced significantly. And what happened before, which I'm thinking will happen again, is regarding fixed rates, that is. One of the big 5 banks will go ahead and just drop the rate. Just because of. And this will happen, and this will disrupt the whole thing. All of a sudden, the fixed rates will become a thing. And all those people that may be on the side hoping that there will be, a $800,000 house will be a $600,000 again, will come back to the market, and then we'll see another. So my take on this is that right around September, October, we're gonna see something like this. And my predictions regarding the rental market is getting there. The supply is basically really getting narrow to what the demand is right now with the rentals, and we're seeing the average rents climbing as well because of the pressures we've been seeing. So at the end of the day, my take is that we're still limited on the number of homes available. Now currently is a market for a buyer who's willing to take on the unknown to be able to benefit. And those who are standing on the sideline, believe me, it has happened before. When you decide to get back into the market is when everybody else wants to get back in there, okay? And this will cause that insanity that we're used to seeing. So if you are truly in the market, whether you have a home to sell, to purchase something, everything is in ratio. So yes, you might have sold your home $700,000 2 months ago. You had to purchase something in $850. Now you might sell it for $670 and purchase something for $800. The ratio is almost there. It hasn't changed. And remember, your affordability is reducing, okay, as the prices are cooling or declining. So that is an interesting thing to track, and it's an unknown territory for sure. But again, everything comes with a risk. And if your plan to purchase is 5 year plus, I don't see a significant loss here and a risk. And for those who have been pre-approved, so you have your pre-approval with the previous rates, I strongly advise you guys to go back into the bank again to be able to get reapproved, just because a lot of regulations or restrictions are changing things, and you want to be certain that even that pre-approval will take precedent or has a value to it with your current financial institution. And we'll get going on the numbers here, and I'll give you a recap and overall what to do with this sort of a market and how to approach it towards the end of the video. So let's get going with this. This is numbers of Ottawa and surrounding, and we'll get into specific for each segmented category within the Ottawa region, from Orleans to Canada and north to south of Ottawa. Looking at May 2022, the number of sales has dropped month over month, 22 versus 2021. So residential, we have 1,384 versus 1,768. So that's a drop of 22% almost. And looking at the condominiums, number of sales, 2022, 462 versus 517 units in 2021, and that's a drop of 11%. So again, compared to the year before, we're still not in a panic mode here. Looking at the average sale price of residentials for 2022, we have $102,000 versus 2021, $741,000. That's an increase of 8%. Now this amount will be more when we look at the more central Ottawa. And looking at the condominium average sale price for 2022, $473,000 approximately versus 2021, $425,000, and that's an increase of almost 11%. So I'll let you guys take a look at the rest of this data, and we'll get into more specifically looking at the residential homes and looking at the listed versus sold for the month of May. We are looking at 1,131 active units versus 979 sold units, and we're not usually used to seeing something like this. Now the inventory is much higher. Now this is a lot I'm seeing with dated or older units that are sitting on the market. Again, those that have been updated or been on locations, they're still looking at the multiple bids happening. But this is a change, right? Change of air sort of for buyers who are more confident right now. I think the timing couldn't even be better, because I would really take advantage of that, because things I feel like people need to buy and sell at the end of the day. So this sort of a delay, if that you need to buy or sell, now would be the time, as opposed to just waiting, hoping for something to happen. The uncertainty again is there, but I think just the leap is needed for you to take advantage of something like this, because we might again not see this anymore in the coming months, sort of. Okay, so looking at the year before, look at this complete opposite. We had 857 active listings and 1,278 sold units a year before in May 2021. Now the ratio, residential list price versus sold price ratio, we are at a 105% approximately for the month of May 2022 versus 110% of previous year. Now remember this, a lot of listings don't have offer dates anymore. So because of that, what's happening? The listing agents are significantly increasing the list prices, so that when that sells, the ratio between the list and sold obviously will drop significantly, as we've seen in February, which is 114% to 104%. So one of the reasons that you are seeing a decline in the ratio of list and sold homes is because the fact that now, because of the calmer market we're having, the list prices have been increased significantly. Okay, so there's not a significant jump as we've seen before. All right, so looking at the average, now we have dropped in the average overall sales. So our peak really was right around March, which was 911,000 now, where we've dropped to 866,000. Again, not really that alarming, considering that we're still much higher than what it was last year this time, which was about 800,000 last May for the residential category. Looking at the days on the market at home takes to sell, this is interesting because still we're looking at about 10 days for May and 8 days for year over year. So that's significantly lower than, for example, what we had in December, which was 18 days. I mean, these number of days for a home to sell in the market, guys, it's pretty much nothing compared to what we had in the previous years. You know, typically for a home in a normal market to sell, you're looking at 60 days. So we're, I guess, spoiled in a sense. Oh my God, a home took 30 days to sell. You know what? I think this is still, I don't see a reason to be alarmed about. Looking at the condominium market for the month of May 2022, number of list versus sold, you are looking at 477 active units and 445 sold units. And now the condo market is changing as well. We're seeing more units in the market. Again, a lot of people can take advantage of that, or you may choose to just wait and see what happens. And looking at the previous year, we had number of sales surpassed 490 for May 2021 versus 450 active units. Looking at the ratio of list versus sold for condominiums for month of May, 102% versus 105% month over month. That is a drop, and a similar explanation could be said for the condominiums. And again, condos are a bit more delicate than residential, so they tend to fluctuate more in uncertain times. So we may see a difference of numbers more as opposed to the residential freeholds with the condominiums. Look at the average sold price for the month of May. We were at 478,000 approximately, which hasn't changed much, which is interesting because we're not seeing as much a fluctuation with the prices yet with the condominiums. It's bound to be seen based on the uncertainty factor of things, but it's still much higher than what we had as an average sold price for the previous year, and that was last year May. It was $430,000. Looking at the condominiums, the days it takes for a condo unit to sell, about 12 days for month of May, which was the same the same last year. Again, nothing alarming compared to what we saw in the previous months, which was almost a month for every unit to sell. I think we're still in pretty much okay as far as that goes. And now looking at the rentals, which is interesting. Now look at that. The active listings, 535 units for the month of May versus 519 rented units, and the gap is really closing in, right? If you look at the month before, we are seeing that the demand for rental units is going up. Obviously, it's a seasonal thing, but at the same time, because of the pressures being felt for the within the residential and condominium market for purchase, this is a reflection on to the rental market, and more demand for the rental market, something else that is happening. And looking at the previous year, May 2021, we had 372 active units versus 403 rented units. Looking at the days a rental unit takes to rent out for the month of May, 22 days, and 21 days for the previous year and year over year. And then again, this is fine. We're not seeing too much difference. Yes, we are seeing a drop in the average overall price, but in terms of how long it takes a unit to sell, or even the ratio between the list and sold, those are basically things that will gradually fluctuate, but nothing from this is alarming considering the end result. And that's my conclusion, which I want to provide to you, is if you are looking for an investment as an investor, perhaps you have the opportunity to wait around and see, and you seek certain criteria or type of home that stays on the market, and you can go for it and purchase it. And even for investors, I highly recommend they go for it now, especially if you have a large down payment, or it's a cash purchase, or whatever the case may be, that you don't rely too much on borrowing. Now is the best time to do it. And for buyers who are whether buying or selling their home at the same time, or just purchasing a home, I feel like waiting will do you no good, because if you are waiting, the variable rates will keep going up, and the best strategy you can do at the moment is to get extended closing dates. And that will allow you, for example, to sell your property if you are selling a home to purchase. So you purchase your home, get an extended closing date, and then that gives you enough time in a calmer market to sell your property, and you can match the closing date so that there is not a lot of pressure on you guys when the time comes to transition. So that's my take on it. And overall, with the builders, with new developments, they are encouraging people to pursue new build homes, but we're still seeing the same issue. The delivery dates are extended. So you are looking into 2024 for most of new developments, which if you need to do your move now, it's difficult, right? And at the same time, with the unknown factor, with the interest rates, to wait 2 years to get something that you may have to qualify in terms of qualification, more difficult, and with a higher rate, the unknowns are, the uncertainty is much more in the future. Sure, you're getting a new built home, but the prices have increased, and the wait time, and the interest rates, and the qualification for those mortgages are something that is significant to take on. So overall, I think the best approach would be, if you are serious about really buying something and selling something, now would be a good time, because this is opportunity in my eyes, really, for those. And then the last thing you want is to get it back into the same routine that we've been doing this for the years before, which I personally don't enjoy either. Is that all these buyers all of a sudden get into it, and we see prices starting to climb up again, just because the number of homes, I repeat, the number of inventory and homes are still not enough for the number of buyers that are actively looking for a home, although they may be sitting on the sidelines at the moment. So that's my 2 piece on this, guys. As always, please do remember to like this video and to subscribe to my YouTube channel. If you have any questions at all, feel free to email me, text me, phone call. I love to sit down with you guys over a cup of coffee anytime. Any pointers you need, any advice you need, feel free to reach out. No problem at all. Until next time, take care.